Hello, and welcome to the Wade Borth podcast. I'm your host, Wade Borth, and in every episode, my goal is to get you to think differently about how money works and ultimately to empower you to take control of your money and your personal financing system.
So speaking, going down that same line, because here's where I'll just kind of share some of the noise of the conversation I'm hearing. Some of the noise that you get, and we're hearing about it in the news, like interest rates are on the rise, right? So everybody's fearful, right? So this idea of fear it's interesting conversation. We probably have a whole topic about that in people, but I'm old enough to know, and you probably are old enough to remember as well, when 6%, 7% interest rates weren't an all bad interest rate on houses, on mortgages, right? And so it's funny how people will relate the 6% mortgage rate to being a high interest rate. And I'm like, man, I remember my dad paying 18% interest rate on the farm mortgage. So it's all perspective. But the interesting part is that almost everybody under the age of 35, I think it was said, they don't remember interest rates over 5%.
It's crazy, right? I mean, when I got in the business is right when rates dropped into the sevens and people were just amazed by that. And I always kind of joke about it. That first house that I bought, I did a refinance on it and I got 10%. I'm like, man, why didn't I get 9.875? Like, why didn't I get some of the 9? I still had double-digit interest rate, but at that time I wasn't as curious as I am now, or as knowledgeable I am. I don't have the referral sources that I have now, people that are smart like you that I can ask for advice. And, you use that word fear. And I think the challenge is in a market like we have now, certainly people ask me a lot about interest rates because interest rates went up faster than they've ever gone up, and they doubled, right? Normally they might go up, a little bit, 10% or maybe 20% in a really bad time, but to go up more than double was unprecedented. And I think that all of a sudden it's such a different world that we're in today versus just 6 months ago that it causes people to go back on their heels and be fearful versus say, okay, the market has changed. How can I benefit in this market? Where's the opportunity? And I think that's a lot of the challenge right now, is that when you have uncertainty, we already talked about, you have to decide who you're going to listen to, where you're going to get your advice from. I know that there's certain people if I ask things to, like I love my dad. My dad is super smart and has done really well for himself, but I'm going to get a different opinion from my dad, than I might get from the person I was in the last week whose company got $1 billion valuation when Goldman Sachs invested $100 million for 10%. He had a different opinion on the economy. And then I could talk to you and you're going to have a different opinion, and everyone's opinion is right for them. And so then it's just a matter of how can I take what I have right now and move from fear to move from that to knowledge, to move from what's the action I can take that's going to be best for me to come out further ahead today based on what I know today.
That's a great point. So let me just recap that. You move from fear to knowledge to what action you can take that's going to serve your ultimate goal, your ultimate desire.
Yeah, absolutely. I always know there's always opportunity in every market, right? Yeah. And, certainly for me, again, I think real estate the most because that's what I've done now for, 30 years. I've been a real estate investor and I've worked with real estate investors, and I've heard they all have a different opinion too on how to get to this. They're all getting to the same place. They're all growing wealth, but some are like, well, I want to pay cash for my houses. And others are saying, okay, I can get mortgage, but I don't have 50% down. Others are saying, okay, I'll get a mortgage for this amount and I'm going to use my insurance policy and I'm going to get my down payment from there. I mean, everyone's got a different way of doing it. And the end result is they're going to grow some wealth through real estate, but they're all going to get there at different speeds and different paths. And so again, it's a matter of figuring out what is that opportunity. And so, it sounds kind of funny because again, I was in a room this morning with a bunch of really smart local real estate agents. And this idea of fear came up as how do we get people to move from fear? And really, we know, especially in real estate, I mean, real estate's local, it's not national. So number one, people forget that the news agencies are here to sell ads. And so number one is they're going to put whatever's the most fearful thing they can put out there to get the most eyeballs. And then it may be 100% accurate for you because maybe you're in a market that's the average of the US. But I know, and last week a guy from New Jersey told me that New Jersey's still crushing it in real estate. Like no inventory and stuff is selling as fast as they can put it out. If you would ask me, is New Jersey crushing? I would probably said, maybe not. I don't know. I'd say, who do I know in New Jersey that I can call and I can find out from? And then I heard someone else who was in, I think maybe, I don't want to get it wrong because I don't fear anyone to be fearful, but I think they were from North Carolina. They're like, our listings are up like 112% or some crazy number. And so there's all these different things that are out there. And so I think it's just a matter of getting the knowledge about what it is that you want to do from an expert. Ask maybe for their background, like where did you get that opinion? Or maybe ask them if someone didn't believe in this, then what would they say? Why would they say that? So that you can come up with what that is. And again, I again, you got the book behind you there on the shelf, right? Becoming your own banker. And there's certain things that in every market you don't have to have fear about, right? You don't have to have fear of guaranteed returns, right? You don't have to have fear about something that's had, 100+ years. And so that, or I would say, well, gosh, you know what? I feel pretty good about the fact that I've got real estate. And ironically, I think my real estate, it's already probably taken a little bit of a hit. It might take a little bit more of a hit, but it's cash flow real estate. I've got, hate to say it, I got people paying my mortgages, right? There's that joke. You're paying someone's mortgage, either your own or somebody else's. But then I also have insurance, and I know that insurance has a guarantee and it's going to help me out as well. And then I shouldn't say it because it's not very popular, but I do have a little bit of money in the stock market and it's doing this and this, and that's where I get my fear from.
It's funny how that fear is so invasive, right, into everything else, right? You have this one part of your portfolio that gives you the fear and everything else seems to be good, but now you have that fear because that's the one that's affected everything else. So there's a couple of things to that point. I've said many times that the difference between, chaos and opportunity is just, it's a very thin line, right? It's just kind of how we look at things. And when you have access to the banking function in your life, how many times can you take advantage of chaos to make it your opportunity?
Yeah, that's so big.
Yeah, it's huge because most people think, well, they always look at when times are good, this happens, right? So yeah, when times are good, everybody makes money. But it's when times are bad, when you're not losing money. But I had a client, and this was back in 2008, and you probably remember those crazy days in 2008 and 2007 and 2006.
I do all too well.
He was trying to buy a house down in Las Vegas, and I think the house price was, right at about $250,000 for a really nice house in Las Vegas. This was back in 2007. He kind of ho-hummed about it, and all of a sudden, the market very quickly turned south, and the banks turned off the spigot real fast, right? I mean, you probably remember how quickly that was.
Oh, yeah. I was right in the thick of it.
Yeah. And so to that point, he goes, he says, I kind of wanted to buy that house, but he just kind of drug his feet. And he said, now I can't get financing. I said, well, what can you buy it for? He said, I think I can buy it for about $180,000 now. And I said, you have that kind of money in your policy? And he just didn't think, because again, he was conditioned to think the only place to get your money was from Wells Fargo. Let's pick on Wells Fargo today.
We can pick on them. That's all right.
Yeah, they deserve it. So, he was conditioned to think that was the thought process, even though we had talked many times about borrowing against your policy to buy at least the down payment on this property. And so then he come back and he says, hey, I need to take a policy loan for I think it was $160,000. I said, 160? He goes, yeah, I just threw out an offer. And he said, I was able to pick up this house for $160,000. So he needed a policy loan for $160,000. We got that to him in about 2 days. He turned around and bought the house. And last year when I checked with him, talked with him, it was close to $1 million is the value on that house.
Wow. I love those stories, right? I think that's the key. And it's the whole idea. I mean, think about the power in that, right? The power in not having to worry to somebody else say no. You talked about freedom before. I think that, because of what you did for him, he had freedom, and look what the freedom has done. It's made him even wealthier than he was before.
Yeah. And to that point, you think about, if you're in a business, if you're whatever you're doing, where you need cash to operate, you need cash to take advantage of opportunities. If you don't control the banking function in your life and your business, who's really in control? Do you really own your business? Do you really control your business? If you have somebody at Bank of America give you a thumbs up or thumbs down for you to move forward, just something to think about, or to buy a piece of real estate or whatever it might be, right? Do I use the banks? Do I use real estate or brokers or people at your organization, your industry? Absolutely. But I'm not dependent or reliant on it. And I kind of marry the two, and they work well together. I think that's the real key.
And I agree with you. I think that's again, what can you do to reduce friction and stress in your life? How can you reduce fear? Is take control.
Exactly. And then again, having that availability of other cash just in case something is happening, right? If you have a couple $100,000 of safe, guaranteed liquid cash, and also now your mortgages, your renters aren't paying their rent and kind of going backwards, you're underwater, because that's what was happening in 2008. Well, if you have an asset that's not correlated to any market, and you can say, oh, it's guaranteed I can go get the money from there to weather the storm, how many people can come out ahead, so much further ahead, if they could weather that storm at the end of 2008? It would have been huge.
I mean, right. Everybody, right? If they had someone in their life to give them the advice. And I think that's always the challenge, right? I mean, I got to believe for you, that's the frustration, is that people only know the other side of the insurance coin. They don't understand the piece that you teach.
Well, I think that leads to kind of what you were saying earlier. I'd asked you the question, what do you see about industry leaders? And, in who do we trust? And I think part of that, I've been in business a long time, 35 years, and I'm like, I want to work with people that have the same set of values as I have, same set of, founding pillars, or at least a majority of that same thing. And what I find is some people that I'm talking to, and you probably see the same thing, some people you talk to is like, and they're just completely out of alignment with what my belief system is and their belief system, that maybe they're not meant to work with me. And let me find someone that they can work with, because obviously if we don't mesh up, I would rather, we're in this business for the long haul. We're going to be here for the next 35 years. At least I am. At least that's my plan. And I want to make sure that those people I'm working with have the same set of values of thinking long term, right? I want to empower people to grow their knowledge where they want to grow it. I don't want to be the gatekeeper in any sense. So I just want to teach them and empower them to take control of their lives and their banking functions, not me being their banker. That's why Nelson wrote the book, Becoming Your Own Banker, not Wade or Todd becoming your banker. So
yeah, I love that. I love it because it's a different, get a unique perspective on it.
Right. And to that sense is like, but it's about where are we getting our money? And if I have my safe, secure money, I can make a lot of good choices. If things don't work out exactly like I planned, which they rarely do, I have safe, secure money that I can weather any kind of storm. So
I always tell people when it comes to money, like I know what I can sleep well at night with, right? It's the pillow test, right? So,
right.
Everyone's got a different perspective on it. And so I say, if I can take the time to educate you on what the options are, then you can pick the option that will help you sleep best at night. I heard someone call it a SWAN number, sleep well at night. And, again, I think for folks, let's use a house as an example. I mean, this, again, it's a perfect example from any time, but 2008, when, people have built up this equity in their house and they viewed that as their money, but then when they needed it, they couldn't necessarily access it. And where you've got this different thing over here that you help people with that they actually have that's secure, that's there, that builds up over time, that's there when they need it. And you're right, they don't have to ask you for it. They just call up and it comes to them within a couple of days, if even that.
Right. Take advantage of the opportunities. So with that, that fear of, I think this is where we're going. We kind of got sidetracked. So thank you for,
oh, I'm so good at that. Look, there's a bird.
Squirrel. But, right now with the fear in the marketplace, right? So what do you see as far as, again, I'm sure your crystal ball, like my crystal ball, has been in the shop for the last 40 years, right?
Yeah, it's really foggy. That's what I tell people.
Right. What are your thoughts around how, at least locally where you're at, housing prices, rates? I've listened to a lot of different podcasts and different people talk. I had a demographer that was on, I listened to, he made the point that I think it was like 5 million, we have 5 million units short for housing. He says, this isn't something that's going to go away overnight, right? So he says, we have a huge demand and need for, when he calls them units, I think it's just, could be apartments, could be whatever it is. But he says, there's a real demand throughout the United States. Now, like you said, all real estate is local, kind of like politics, right? So what's going on in your market might not be happening in other people's market, but just in general terms, we see interest rates rising. People are getting concerned about that, but maybe that's an opportunity. And are we seeing housing prices starting to go back down? Or are people kind of foolishly waiting and then they're going to miss an opportunity because they want to wait for the housing prices to retrench 10, 20, 30%, where I don't think that's going to happen, but that's all my own personal thought.
Yeah, what I would say is this, again, you look at nationwide. So Goldman Sachs, I think that they're people that are pretty smart, but we all know that most people who predict things tend to be wrong. They're predicting, 7% drop, a 7% change drop next year, maybe 2% the following year, and house prices, and then going up from there. And then I just use those examples, right? New Jersey's like, well, we're not going to have a problem. I'm in Arizona where they're, Taiwan Semiconductors building, fabs. We've got Intel doing new fabs. We've got, all sorts of big companies coming here and investing, and we have a housing shortage. So, even though you could argue that we have more houses on the market today than we had 6 months ago, which is true, but we're still not an oversupply of inventory. And so it just comes down to the people who are buying now are buying for one of two reasons. Number one is because they have to, right? They're transferred in here from somewhere else and they have to, or, they live in a house and the landlord is selling the house, or the landlord's moving back in the house, I've heard. And so they have to move. And then they say, you know what, this is a good opportunity for me to go out and buy. And so I think if you have to move somewhere, you have to look and say, hey, is it a good opportunity for me to buy? And I have people buying here, and what they're doing is saying, well, hey, I heard that Goldman Sachs says how prices may go down in the whole US. And so they're just saying, all right, I'm going to find the person who will sell me a house at a discount today, who has to sell and is in a hurry to sell. And so they'll just try to buy the house at a little bit of a discount now, not a crazy, no one's getting 30 or 40% off. But you know what? They might be able to find someone who will pay their closing costs, which they couldn't get before. And so they're going to take advantage of the little bit more inventory in the market, and then they're going to use it their advantage so they don't have to really worry about what happens next. I mean, the old adage that historically real estate, has returned, a rate of return, but it's done, it's done like this. I mean, that's ultimately what it's about. And I think time in real estate makes a lot of people look way smarter than they are, myself included. And so I think you've got to find an expert in your market who really understands the market, who has the data to show you, is this a good time to buy? Because I know a lot of investors who are buying in this market, they're just making sure they buy at the right price for them. That makes it an opportunity for them, to buy that property. I'm still buying rental properties, but I'm buying them in markets where it makes sense to buy, where I know that there's going to be strong, jobs are not going away. People aren't fleeing there to come somewhere because it's or has some different environment of some sort that they're looking for. And so there's always opportunity. You just have to know, what is my box for the opportunity, so you don't take too much risk. I mean, that's really what I think you teach, and what I believe in as well, is that you have to control your risk. And if you're going to take a risk, it's got to be for a big reason. And I'm just not a big risk taker anymore.
Yeah, and if we understand, again, this is probably how I've understood the life insurance and that part of it, the policy side of it, not having a risk. But with real estate, I've learned that real estate, either with talking with you or talking with Steve, was your mentor, and who I've started to really get to know as well, is like when you start looking at real estate and with the right vision, the right light, it takes a lot of the risk away. Because again, are we looking short-term risk versus long-term risk, right? If we're buying a piece of investment property where somebody else can make the mortgage and the value is going to continue to go up, even if it goes flat and they, somebody pays their rent and that pays the mortgage, we're owning a piece of property for little or nothing out of our own pocket. And so is there a lot of risk involved in there? Now, people in 2008 thought there wasn't risk either, but obviously there was, because, there was a lot of extenuating circumstances that were happening. But at the end of the day, like you said, if you're thinking long-term, that makes geniuses out of most real estate investors. But,
well, it depends on when you have to move, right? When do you have to sell? Because again, I'm not afraid to buy a property now, even knowing that it may go down in value, because I know in the long haul it's going to go up because I'm long-term. So use your friend who bought the house in Las Vegas, for example. Even if he would have bought it for $250, when it was worth $250, the bank would have loaned him the money. It's still worth $1 million now. He comes out ahead. But if he would have bought it for $250, knowing he had to move in 2 or 3 years when it went to $180 or $160, then he would have been disappointed because he would have had to lose money because of the timing that he had. So timing, I think, comes into a little bit. You asked me about interest rates, so let me answer the question. So I think it's the first question you asked me when we started this whole thing. The experts that I know and follow in the mortgage space believe rates are going to continue to come down into next year. So as inflation comes down, as inflation CPI numbers come in lower year over year, and so they basically take the last 12 months of what the CPI number comes in at, they add those all together to get the inflation rate, and it was really high. We're going into months from 2021, early 2022. That number was pretty high, and so now that the Fed has raised up interest rates to kind of stave off inflation, we're starting to see inflation numbers come in. They're still higher than they would like them to be, but they're lower than they were 12 months ago. So that when you add that new month in, that's lower, and you get rid of the month from 12 months ago that was higher, then the inflation rate comes down. And inflation is the arch enemy of 30-year mortgage rates because it's long-term. And so what's going to happen is we're going to see the Fed continue to raise interest for short-term rates, right? The overnight lending rate between banks. So that's the shortest interest rate that there is. And it's actually not going to keep making the long-term rates go up. In fact, as inflation starts to come down, assuming they keep that in control, we'll see interest rates, come lower. And so again, if you're thinking about this today, when you're listening to this and rates are still quote unquote higher in the sixes, there's strategies that your mortgage lender can talk to you about, a thing called like a 2-1 buy down, where you can have the seller buy your interest rate lower. So it's 2% lower for the first year, 1% lower for the second. And then it goes back up to the other rate for the next 28 years. But most experts believe that you'll have a time frame where, while your rate is artificially lower from what the seller did, that you can refinance into a permanently lower rate as rates come down. And so there are strategies out there that can help those of you who have to move. And there's also strategies that you can use if you find a good deal. Again, I never want to take advantage of somebody, but if someone has to move and they got to get out of their loan for some reason, and it's a great opportunity for you as an investor, there's nothing, wrong with that either. So I do believe, like, kind of last thing I'll say is, like, at least in the Arizona market, right? I use my team as a small microcosm because we're just one team of, many teams. We've got over 200 people pre-qualified to buy houses who are waiting for something, waiting for a price to go down, waiting for their lease to be up, waiting for interest rates. Typically the lease is the one that's not the one. It's really they're waiting for interest rates or they're waiting for housing versus taking advantage of opportunity to buy today. Because once they all think it's time, guess what? Then we're going to have inventory go away quickly, bidding wars again, and people are going to be paying a lot more money. Even if rates are lower, affordability won't be any better. And so there's an opportunity for all of you or anyone that's thinking about buying today, it's just a matter of figuring out what that opportunity is, if it's time for you to do it. And if you don't have to move, then don't, right? If you have a 3% mortgage, then, maybe you do stay put. Maybe instead, you do something different, talk to Wade and figure out what he can do with your policy to help you invest in some other way.
Yeah, that's true. Just look at your situation and don't go into it with fear, because decisions made out of fear typically are not great decisions, right?
Yeah.
Go from fear to knowledge to how does it serve? I love that process that you were talking about, take people from fear into knowledge. And then once they have knowledge, they can see how does that fit to what their values are and to what they're really trying to accomplish. So,
and there's nothing wrong with not taking action when you have the knowledge. What's the wrong way to go is to make a decision without the knowledge and then realizing later it was the wrong decision because you didn't take the time to find out someone who had the knowledge, get a second opinion to see if the person that you got the first opinion is right. And then really, again, inaction is okay, I think, with understanding.
Right, exactly. And I've had some opportunities, and again, I remember the days of higher interest rates, and I made the comment to a friend of mine a long time ago that I said, you can always refinance an interest rate, but you can never refinance the price of the property. So, because interest rates are going to go up, they are going to go down, just we know that's going to be the case. So a couple other quick things that I'll let you go, and I appreciate you, is there is a debate that we were having, a conversation, not even a debate, about the use of a sauna and a cold plunge. Now, I have to say that a sauna and a cold plunge in Arizona is completely different than a sauna and a cold plunge in North Dakota.
I would agree with you.
I was just thinking about that yesterday or today, even as I watched a foot of snow come down, and it's about 30 degrees out. It's nice and cool. It's not cold, but it's cool for here. I said, man, I just got to put my sauna out there. That can just go fall back in the snow. With that, of course.
You should totally do that.
So my understanding is you love the combination of those two, right? You found some great benefits from that even.
I've been on a health journey for a few years. I got a friend who jokes about, he says he's training for old age. And so again, one of these things, when you start hanging out with these entrepreneurs, a lot of them are these, these biohackers you hear about, and people believe that they're going to live to be 170 years old. And I don't know that's really going to be, in the cards for me, but a lot of what I've learned makes sense to me, right? It's kind of, common sense, right? The old days, doctors smoked and said it was healthy, and then now they realize it causes lung cancer and people die from it. So it's what can I learn to be better on myself? And so, transparently, my wife's family has a history of Alzheimer's. And so one of the things is bad for everybody is inflammation. And, one of the things they talk about there is inflammation in the brain. And they look at places like Finland where saunas are a big deal. And they talk about not just the brain health, but also the cardiovascular health that comes from it. And I'm thinking to myself, if I can sit in somewhere, actually relax for 20 minutes a day, and it just happens to be kind of hot, that's okay. I actually love the warmth. I dislike the cold a lot, but ultimately that's good for my body, and it actually is good for my health mentally, just to be able to relax. I mean, I think and I'm just like, I'm running during the day, and so to be forced into this little small thing where I can technically bring my phone in, but I'm just not going to, is really peaceful, and it's good for my brain. And then to get out and jump in the thing, which I have a lot of fear of, is the cold plunge, and to jump in there just 3 to 5 minutes, again, to reduce inflammation. I mean, I'm pretty fortunate, although I grew up as a cyclist and rode my bike, I haven't had too many injuries, but it's interesting to me, my friends who have had like football injuries or other, big injuries somewhere in life say, gosh, when they do the cold plunge, how, the part of their body that didn't work as much or as well works a whole lot better. And so the combination of the two for cardiovascular, brain health, and then the reducing of inflammation is what I'm all about. And in full transparency, at least when people listen to this now, I call it my not so cold plunge. I just lowered the temperature from 70 to 60, and then it's got 39-degree water rolling through it. So eventually I'll be down there, but I've slowly been adjusting myself to it over the, month or so that I've had it. But all my friends kind of make fun of me. I'm like, okay, I decided to call my not so cold plunge. But for me, it's freezing when I get in there, and I definitely believe it's helping me on inflammation.
Well, cool. That's kind of joking aside. I agree with you. Right? The inflammation is killing my body, your body, everybody's body, right? That's the part that's hard on us. So it's funny because the whole idea behind sauna and cold plunge for us in this Norwegian country that we live in up here for the most part, that's been, the Swedes and Norwegian, they all believed in, you go to these old farmsteads, 100, 150 old farmsteads, and you see these rock buildings, and they were saunas, right? rock saunas that they built out in the prairies, because that's what they brought with them from the old country. And that was such a big deal. And then they always make the joke, you'd sit in the sauna, you'd all sweat it up and go jump in a snowbank in the wintertime. So when you're talking about it, I'm like, man, you're just like, it's like talking to the neighbors down the road when I was growing up. So it's just kind of funny that you have that.
Well, I just love it. In fact, really, I only know enough to be dangerous, but if I could talk about being healthier all day, probably hold me more accountable. Maybe I would make a little better choice when I'm, ordering lunch next time. And then really in the end, I felt a whole lot better since I focused on trying to be healthier. And, I'm far from perfect. So, I'm never going to tell someone that, never judge someone for what they do or what they eat, because I'm certainly not there all the way. But you know what? I'm getting better every day.
Cool. Well, that's what we look for, is to be better tomorrow than we were today.
Heck yeah.
So, well, Todd, again, I appreciate your time. Hopefully people found this entertaining, helpful. If you have any questions, reach out to me. I can connect you to Todd's team. But again, just listen to some of the things we talked about. Don't be fearful. Move to knowledge, right? That's probably one of the biggest. Find a way to make yourself emulate those that have been successful. Why are they successful? Ask that question, why. That to me is one of the biggest things. So again, Todd, thank you so much for your training, your mentorship, your leadership. I appreciate it all. And again, more importantly, thank you for your time.
Totally my pleasure. I appreciate the invitation. And, those of you who listened all the way through, hope you got something out of it. I'd love to hear what your number one takeaway was.
If you're enjoying this podcast or know anyone else that might be interested, please be sure to hit the subscribe button and please leave a review. This will help this podcast reach and help more people by ranking higher in searches, and ultimately help more people get out of financial bondage. And don't be afraid to share this podcast with your friends and family, as we can be easily found on Apple Podcasts and Spotify.